Hey guys, and what's up? Welcome to our newest video where we're going to be diving into the top suburbs in Sydney with the highest potential for real estate capital growth. If you're thinking about investing in the Sydney property market, you definitely don't want to miss out on this one. We've done all the research and compiled a list of the suburbs that are showing the most promise for capital growth. So whether you're a seasoned investor or just starting out, this information is going to be super valuable in helping you make an informed decision about where you put your money. So sit back, relax, and let's dive into the top suburbs with the highest potential for real estate capital growth. Before we jump in, let's talk about what makes a suburb in Sydney more likely to see high capital growth in the real estate market. If you're thinking about investing in the Sydney property market, these are the key things to keep in mind. The first and foremost is location is everything. Suburbs that are close to major city centres, transportation hubs, and amenities like schools and shopping centres tend to be more desirable and therefore more likely to see strong capital growth. So if you're considering investing in a suburb, make sure it's in a prime location. Another factor to consider is the overall health of the suburb's property market. Suburbs with low vacancy rates and high demand for housing are likely to see price increases over time. So you want to maximize your investment and look for suburbs with strong property markets. And don't forget to consider the local economy and job market. When people are feeling financially secure and have good prospects for the future, they're more likely to invest in property. So look for suburbs with a thriving local economy and plenty of job opportunities. Finally, it's important to look at suburbs with infrastructure and future development plans. Suburbs with plans for construction or renovations to existing buildings and infrastructure can be good indicators of future growth. So if you want to get on the ground floor, keep an eye out for suburbs with exciting development plans. Keep these factors in mind as we take a closer look at the top suburbs with the highest potential for real estate capital growth. You don't want to miss this. So now you know what to look for in a suburb with high potential for real estate capital growth. Let's dive into the top list. First, we have a suburb that checks all the boxes when it comes to location, property market health, local economy, and future development plans. Are you ready to find out the suburb that takes the top spot? Then do me a little favor and smash that like button and hit that subscribe button to keep up to date with all things property and finance. Let's go. Number one is Greenwich. First up on our list is the suburb of Greenwich, located on the lower North Shore. This area is known for its high standard of living and attractive housing stock, making it a popular choice for families. But it's not just the suburb's location and the housing that make it a great investment opportunity. Greenwich is also well connected with multiple transportation options, including buses, ferries, making it a convenient location for commuters. Plus, the suburb has a strong education sector with a number of good schools located within borders. So why is Greenwich the top suburb on our list? It's all about the unit market. Demand for units in Greenwich is high, and this is reflected in the suburb's relatively high medium unit price. And with such a strong demand for a favorable location, it's not a surprise that Greenwich is likely to see continued growth in the unit market for the years to come. This one is definitely worth considering if you're looking to invest in Sydney's market, especially in the unit market. Let's take a look at this chart showing the medium unit prices in Greenwich over the past few years. As you can see, prices peaked in October of 2021, which is when the property market was at its highest. But after that, we saw a decline in prices during 2022. However, it looks like things are starting to turn around again with prices on the uptick. This could be a sign that the market is heating up, and it's definitely something to keep an eye out if you're considering investing in the Greenwich unit market. So what does this chart tell us about the current state of the Greenwich market? It looks like we might be in for a bit of a roller coaster ride with prices fluctuating over the past few years. Despite the ups and the downs, there's no denying that Greenwich is a strong performer when it comes to the unit market. And with the demand for units in the suburb remaining high, it's definitely worth considering if you're looking to invest in Sydney's property market. Up next, we want to talk about the median days on market for Greenwich. This is a measure on how long it takes for a unit in the suburb to sell, and it's a good indicator of demand in the market. So how does Greenwich compare to the rest of Australia? Well, according to our chart, the median days on market in Greenwich is just 29 days. That's compared to the Australian median, which is 41 days. This means that units in Greenwich are selling much faster than the national average, which is a clear sign of high demand. But what does this mean for investors? Simply put, it means that there is a lot of buyers out there looking for a unit in Greenwich. And with demand like that, it's no surprise that the suburb is a strong performer in the unit market. If you're considering investing in Sydney's property market, Greenwich is definitely one to take a closer look. We've already talked about how high demand is a key factor in the success of the unit market in Greenwich. But just how high is the demand? To get a sense of this, we need to take a look at the demand to supply ratio of the suburb. The demand to supply ratio is a measure of how many buyers are looking for units in the area compared to the number of available units. A high demand to supply ratio is a good sign for investors, as it indicates there's a strong demand for properties in the area. How does Greenwich compare to the rest of Australia? According to our data, the demand to supply ratio for Greenwich is an impressive 80 to the national median of 53. This means that Greenwich has the highest demand to supply ratio of any market in Australia, which is a clear sign of the strength of the unit market in the suburb. If you're looking to invest in the Sydney property market, then Greenwich is definitely worth considering. Another key factor when looking into the unit market in Greenwich is the suburb's neighborhood price balance. So what is neighborhood price balance and how does it affect the growth of the potential market? Neighborhood price balance is the measure of how the prices of units in the suburb compared to prices of units in the surrounding suburbs. A high neighborhood price balance indicates that prices of units in the suburb are similar to prices of units in the surrounding area. This can be a good sign for investors as it suggests that the market is stable and not prone to price fluctuations. And how does Greenwich compare to the rest of Australia when it comes to neighborhood prices? According to our data, the suburb has the highest neighborhood price balance score in the country. This is another indicator of the stability and growth potential of the unit market in Greenwich. We've already talked about how the unit market in Greenwich has strong growth potential thanks to factors like high demand and stable prices, but there's one more factor that makes Greenwich an especially promising place to invest. It's ripple effect. So what is a ripple effect and how does it affect the growth potential of the market? The ripple effect potential is a measure of how the growth of a market in one suburb can impact the growth of a neighborhood market. Ripple effect potential is a measure of how the growth of a market in one suburb can impact the growth of neighboring markets. A high ripple effect potential means that growth of a market in one suburb is likely to have a positive impact on growth of markets in neighboring suburbs. And when it comes to ripple effect potential, Greenwich is in the top 16th percentile of all Australian markets. This is a very good score and is another good indicator of strong growth potential of the unit market in Greenwich. We've already talked about how the unit market in Greenwich has strong potential thanks to factors like high demand, stable prices, and high ripple effect potential. But there's one more factor that makes Greenwich a promising place to invest. It's market cycle timing. So what is market cycle timing and how does it affect the potential growth of the market? Market cycle timing is a measure of where the market is in its current cycle of growth. A market that is at the beginning of its cycle is likely to have more room for growth, while a market at the end of its cycle may not have as much potential growth. When it comes to market cycle timing, Greenwich has a score of 65, which puts it in the top 3rd percentile of all Australian markets. This is a very good score and another good indication of a strong growth potential of the unit market in Greenwich. We've already talked about how the unit market in Greenwich has strong potential for growth thanks to factors like high demand, stable prices, high ripple effect, and good market cycle timing. But there's one more factor that makes Greenwich a promising place to investors, and that's the unit to house value. So what's the unit to house values and how does it affect the potential growth of the market? Units to house value is a measure of the relative value of units in a suburb compared to houses. A high units to house value indicates that units are a good value compared to houses, and may be a good investment opportunity. A high units to house value indicates that units are a good value compared to houses and may be a good opportunity to invest. And when it comes to units to house values, Greenwich has a score of 92, which puts it in the top 4th percentile of all Australian markets. This is a very good score and another indication of a strong growth potential of the unit market in Greenwich. So there you have it, all the reasons why Greenwich is a strong performer in the unit market and a promising place to invest. With high demand, stable prices, high ripple effect potential, good market cycle timing, and a high unit to house value, it's no wonder that Greenwich is a top suburb for real estate investment. But Greenwich isn't the only suburb worth considering in Sydney's property market. Next up, we're going to take a look at Marrickville, another suburb with strong potential. Number 2 on our list is Marrickville, located in the inner west of Sydney. This area has seen significant growth in recent years, and Marrickville is no exception. But what makes Marrickville such a promising place to invest, especially in the unit market? Firstly, the suburb is well connected with multiple transport options, including trains and buses, making it a convenient location for commuters. Marrickville is also home to a number of popular dining and entertainment options, including a thriving food and drink scene. But it's not just the suburb's location and amenities that make it a great investment opportunity in the unit market. The demand for units in Marrickville is high, and this is reflected in the suburb's relatively high medium unit price. Additionally, Marrickville has a diverse population and a strong community atmosphere, which makes it a desirable location for families and young professionals alike. All these factors contribute to Marrickville's potential for growth in the unit market. If you're considering investing in Sydney's property market, especially in the unit market, this is definitely a suburb worth taking a closer look. But what makes Marrickville the number 2 suburb on our list? In the next section, we're going to take a closer look at the real estate data to show you exactly why Marrickville is such a promising place to invest. Let's take a look at the median unit prices in Marrickville over the past few years. As you can see, prices in Marrickville peaked later than Greenwich in February of 2022. Since then, we've seen a decline in prices. But despite the recent dip, there are some promising indicators that make us think that Marrickville is primed to be a top performer in 2023. Looking at the median days on market for Marrickville, we see that units in the suburb are staying on the market for an average of 31 days. This is a sign of high demand, as properties that are in high demand tend to sell more quickly. So what does this data tell us about the current state of the unit market in Marrickville? It looks like demand remains strong despite the recent dip in property prices. This is a good sign for investors, as it suggests that Marrickville is still a desirable location and that the market is more likely to bounce back in the coming months. The demand to supply ratio for Marrickville is another promising indicator of the strength of the unit market in the suburb. At 77, the suburb's demand to supply ratio is in the top percentile of all markets and not far off from Greenwich's high demand to supply ratio. This indicates that there's strong demand for units in Marrickville, which is a good sign for investors. The neighborhood price balance for Marrickville is above average, which is a promising indication of the stability of the market in the suburb. Next up, let's take a look at the ripple effect potential. This metric is an important factor to consider when evaluating the potential for growth in the suburbs unit market. And the good news is that Marrickville's ripple effect potential is a promising 11.89%, which puts it in the top 24th percentile of all markets. This is a strong indicator that the market in Marrickville is set to reverse its downwards trend and to start growing in the near future. Next, let's take a look at Marrickville's market cycle timing. According to our data, Marrickville's market cycle timing is ranked as normal, which is a score of 51. While this may not sound particularly exciting at first glance, it's important to remember that a normal market cycle timing is still considered a good sign for investors. In fact, a score of 51 puts Marrickville in the 9th percentile of all Australian markets, which is a strong indicator of the suburb's potential growth. Marrickville's unit to house ratio is another factor to consider when evaluating the potential for the growth in this suburb's unit market. At a score of 90, the suburb's unit to house ratio is well above the average of 45, which puts it in the 7th percentile of all markets. This is a really strong indicator that the unit market in Marrickville is performing well and that the suburb has good potential for growth. All right, guys, we've been talking about some seriously hot suburbs in Sydney. And next up, we've got a real contender, which is Lane Cove North. This lower North Shore location is a commuter's dream, with great transportation options and a quick trip into the city. But it's not just the convenience factor that makes Lane Cove North stand out. This suburb is also home to top-notch schools and plenty of amenities, making it a great choice for families. And let's not forget about the unit market. Demand is high and the median unit price reflects that. All signs point to Lane Cove North being a solid bet for unit investors and home buyers. Let's dive into the data and see what makes this suburb such a promising choice. Let's look at Lane Cove North unit market median price. This is an important factor to consider when evaluating the potential for growth in the suburb unit market. And we've got some interesting data to share with you. As you can see in the chart, Lane Cove North median unit price peaked in April of 2022, which was later than the peaks of both Greenwich and Marrickville. However, it's important to note that the market in Lane Cove North has remained relatively stable since, with only a slight dip in prices. This is a good sign for investors as it indicates that the market in Lane Cove North is stable and prices are relatively stable. As you can see, Lane Cove North has a days on market of just 25 days, which puts it in the top 9th percentile of all markets. This is a strong indicator that there is a high demand for units in Lane Cove North and that the market in the suburb is performing well. In fact, Lane Cove North's days on market is even lower than the overall market average of 41 days. It's lower than the days on market in both Marrickville and Greenwich. This is a really promising sign for investors, and it's one of the factors that sets Lane Cove North apart as a top market performer. All right, let's continue to evaluate the demand for units in Lane Cove North. We've already seen that the suburb has low days on market, which is a strong indicator of high demand. But there's another metric we can look at to get a more complete picture of the demand in the suburb, and that's the demand to supply ratio. As you can see, Lane Cove North has a high demand to supply ratio of 65, which puts it in the top 3rd percentile of all markets. This is above the overall market average of 53. And while it's lower than the demand to supply ratio of both Marrickville and Greenwich, it's still a strong indication that there's a high demand for units in Lane Cove North and that the market in the suburb is set for growth in the near future. Next up is neighborhood price balancing. Now, it's important to note that neighborhood price balancing is just one factor to take into consideration when evaluating the market. It's not the only thing you should look at, and it's also not the most important metric. However, it can be a helpful tool in understanding how the market is performing. With that said, let's take a look at Lane Cove North's neighborhood price balancing. As you can see, the suburb has an average neighborhood price balancing. This is slightly below the overall market average and is lower than the neighborhood price balancing of both Marrickville and Greenwich. This necessarily isn't a bad thing, but it's something to keep in mind when evaluating the potential for growth in Lane Cove North's unit market. Overall, Lane Cove North's neighborhood price balancing is just one factor to consider when evaluating the potential for growth in the suburb's unit market. While it may not be the highest on the list, the suburb's strong performance in other metrics make it a promising choice for investors. Let's take a look at Lane Cove North unit to house value. As you can see, the suburb has a unit to house value of 88, which puts it in the top 10th percentile for all markets. This is a solid score and is slightly above the overall market average of 45. This is another promising sign for Lane Cove North's unit market. Overall, Lane Cove North's unit to house value is an important metric to consider when evaluating the potential for growth in the suburb's unit market. Its above average score is a strong indication that the unit market in Lane Cove North is performing well compared to the housing market. It's another factor that sets the suburb apart as a top performer in the unit market. Now let's take a look at Lane Cove North's ripple effect potential. As you can see, the suburb has a ripple effect potential of 13.39%, which is on the lower side. This necessarily isn't a bad thing, but it's something you want to keep in mind when evaluating the potential growth for Lane Cove North's unit market. Overall, Lane Cove North's ripple effect potential is just one factor to consider when evaluating the potential growth of the suburb's unit market. While it might not be the highest on the list, the suburb's strong performance in other metrics makes it a promising choice for investors. Let's finish our analysis of Lane Cove North's unit market by taking a look at the suburb's long-term growth. This metric measures how property values in the suburb have grown over a long period of time, and it can be a helpful tool in understanding the potential long-term growth in the market. Now, when we look at Lane Cove North's long-term growth, we see that it's slightly below the overall market average of 6.5%. At first glance, this might seem like a negative. However, it's actually a good thing when it comes down to evaluating the potential growth in Lane Cove North's unit market. That's because a lower long-term growth can be a sign that a market is less well known and therefore less competitive. When a market has a high long-term growth rate, it can attract a lot of attention, which drives up prices and makes it even harder for new investors to get a good deal. But a market with a lower long-term growth rate may be less crowded, which can make it a good opportunity for investors to get in on the ground floor. While Lane Cove North's long-term growth rate might be slightly below the overall market average, there's actually a positive sign when it comes to evaluating the potential for growth in the suburbs unit market. It could indicate the market is less well known, which could make it a good opportunity for those looking to invest in the unit market. If you're thinking about getting into the Sydney real estate market, there's definitely some neighborhoods that's worth considering. But don't take my word for it, do your own research and make sure you consider all factors before making any decision. If you're looking for a great mortgage broker, give us a call on 1300 088 065 or head to our website huntergalloway.com.au and complete a free assessment. We work with investors, home buyers and refinances right across Australia. Good luck and happy investing or house hunting.